Just a brief history of Intelsat. They were established in 1965 and privatized in 2001. Some important events are in 2006 they acquired Pan Am Sat, and they were acquired by BC Partners and Silver Lake in 2008. And we're going to focus on that acquisition in this presentation.
We would like to begin our presentation by briefly introducing the major companies involved in this transaction. Intelsat is the leading provider of satellite services worldwide. The company was formed in 1964 as a part of an intergovernmental organization and now provides services delivering information and entertainment for many of the world's leading media and network companies.
One of the first items of business that BC Partners sought to accomplish was to relocate control of Intelsat to a Bermuda-based company. Intelsat filed to transfer ownership control of itself and 6 subsidiary companies to the newly formed Bermuda-based company, Serafina, through the Commissioners Act of 1934 with the FCC. The subsidiary companies included Intelsat LLC, Intelsat North American LLC, Intelsat General Corporation, Intelsat USA License Corp., Pan Am Sat Licensee Corp., and Pan Am Sat H2 Licensee Corp.
The third company is BC Partners. BC Partners is a private equity firm specializing in buyouts and acquisitions financing in Europe and United States. The firm invests across all industries. BC Partners was founded in 1986 and is based in London, United Kingdom, with additional offices in Paris, France, New York City, Milan, and Hamburg. BC Partner is a majority shareholder of Intelsat, the global satellite services provider valued at $16.6 billion in its leveraged buyout in 2007, one of the largest private equity buyouts of all time. The last company is Silver Lake. Silver Lake is the global leader in the technology investing, with over $23 billion of combined assets under management and committed capital and a team of approximately 110 investment and value creation professionals located around the world. Silver Lake is an American private equity firm focused on leveraged buyout and growth capital investments in technology-enabled, and related industries. Founded in 1999, the firm is an investment firm in the technology sector, and among its investments are Avago, Dell, Alibaba, GoDaddy, William Morris Elevator, IMG, Avaya, Celebrity Holdings, Skype, Seagate Technology, and Instinet.
There were no synergies or advantages added from the Intelsat and BC Partners transaction. BC Partners specialized in financial buyouts, hence BC Partners was a financial buyer in this transaction. BC Partners originally planned to resell Intelsat for a profit, which it did in the 2013 IPO.
Just to briefly go over all the companies involved in the transaction, the sellers of Intelsat include Apex Partners, Apollo Management, Madison Dearborn Partners, and Permira Advisors. These members had originally purchased the public company back in 2004 and made it into a private company. The buyers of Intelsat was made up of a group of companies which formed a consortium named Serafina Holdings. Serafina was formed by BC Partners and was made up of Silver Lake, Unison Capital of Japan, and a few small equity investors. After the buyout, Serafina was renamed Intelsat Global. There were a couple of financial advisors involved in this transaction. To Intelsat, there was Credit Suisse, and to BC Holdings, there was PricewaterhouseCoopers. Several companies were involved in the original bidding process. Blackstone Group got the bids going with a preliminary bid of $6 billion for Intelsat. After the initial bid from Blackstone Group, Intelsat thought it would be best to hold an auction to try and get a higher bid. During the formal auction, Blackstone Group lost interest and never actually submitted a formal bid. The participants who were included in this bid were EchoStar Communications and Liberty Media Corp., Laurel Space and Communications Incorporated, Providence Equity Partners, Carlyle Group, and Mackay Bank of Australia. The most interesting of these bids was the bid by EchoStar and Liberty, which included investors such as Dish Network and DirecTV. This bid had significant hurdles that would likely come under regulatory and antitrust issues, which made them an unlikely candidate.
In 2008, Intelsat had a total equity value of $5.03 billion, total outstanding debt of $14.9 billion, and a total value of $16.4 billion, with an EBITDA of 1.59, and the key multiples will be explained in further detail in the next slide.
Premiums and multiples for this transaction include a total enterprise value of $16.4 billion, an EBITDA of $1.59 billion, total assets of $12.05 billion, and an enterprise value over EBITDA of 10.31 times. Total assets over equity were 3.26, and the purchase was made at a discount with a multiplier of 9.7 times. This is noticeably higher than typical. Total debt for this transaction was $14.9 billion, 3.85 of which was incurred after closing. The debt to EBITDA was 9.37 times, and the interest expense to EBITDA was 1.04 times. Because this industry has steady cash flows historically, acquiring large amounts of debt relative to their equity position was possible.
The sources of funds used by the consortium in this transaction included roughly $2.8 billion in senior unsecured bridge loans and $2.16 billion in paid-in-kind election bridge loans, making this nearly a $5 billion buyout. The most significant uses of funds by the consortium included $4.8 billion in cash paid to the previous owners, approximately $66.25 million in transaction fees, and a $3.5 billion investment in a satellite program to grow Intelsat. As a part of this transaction, there were many regulatory, legal, tax, and accounting issues which were introduced to the company. A few of these concerns stemmed from the transfer of ownership of Intelsat and its subsidiaries to the Bermuda-based company Serafina. This transaction saves the company significant amounts of money due to the lack of corporate taxes, but adds to the regulatory and accounting complexity of running a multinational company. Another major issue was introduced to the company with its declined credit ratings. Many of its credit scores have declined since the transaction, which could hurt the company's ability to borrow money and meet its debt obligations.
Financing for the LBO, a $15.9 billion transaction value, came in the form of a syndicated loan. Credit Suisse, as the largest investor, was the advisor of the $5.1 billion Intelsat loan in syndication with Bank of America and Morgan Stanley. These financial commitments were supported by a $2.81 billion senior bridge loan with a rate of 4.5% over the LIBOR rate and a $2.15 billion PIK election bridge loan with a rate of 4.75% over the LIBOR rate. With an additional $4.96 billion loan to back the BC Partners LBO, bond securitization was considered. In mid-2008, Intelsat's LBO bridge loans were converted into permanent securities under Rule 144A. The respective rates or coupons of this debt offering moved from their floating rates to 11.25% for the cash pay issuance and 11.5% for the PIK toggle notes in August of that year. These issuances were rated as CCC+ with a $100 face value and a 9-year maturity.